What is the difference between IPO and FPO? It is a well-known fact that all business entities, small or big, require cash flow to finance their day-to-day operations. Companies can raise new capital through debt or equity. Companies sell their shares to raise funds through equity. There are two fundamental techniques that firms use to raise funds from equity markets: initial public offer, IPO, and follow-on public offer, FPO. If you want to be a successful trader or investor, you must first understand the concepts of IPO and FPO. What is an initial public offer? The IPO, or initial public offering, also known as offering, is the first time a company goes public. Saying a company has gone public means it has offered its shares to the public and is ready to be listed on stock exchanges. The IPO is the first time a company is listed on the NSE or BSE, or both, offering its shares for public trading. What is a follow-on public offer? Follow-on public offer, FPO, as the name suggests, is a follow-up to the initial public offer. A FPO is the issuance of shares after the company has been listed on a stock exchange. So any issue floated after the initial one is an FPO. Differences between IPO and FPO. An IPO is the first or initial sale of a company's shares to the general public, whereas an FPO is an additional share sale offer. Whereas IPO is issued with the intention of raising capital through public investment, the FPO is issued with the intention of attracting additional public investment. An IPO is generally riskier than an FPO because an individual investor has no idea what will happen to the company in the future. When compared to IPO, FPO is a cheaper and a safer option. When it comes to FPO, investors can look at the company's past performance and make assumptions about its future growth prospects. To sum it up, investing in IPO or FPO depends on your risk tolerance and goals. Since you do not have much idea about the company, your risk tolerance should be high to invest in an IPO. For individual investors and new investors, FPO is a relatively safe option. If you are a long-term investor with good risk appetite, you should consider investing in an IPO. Furthermore, IPOs have a greater potential for higher returns if the company gets off to a good start. If you need an expert review of your roadmap to meet your financial goals, consider contacting Accordion's Business Services.